Will ETH be as dominant as it is today? No. Will Bitcoin be as dominant as it is today? No. Will Bitcoin be challenged in its role? Highly unlikely. Will ETH be fully challenged? Don't know. Possible, because it's a more open platform. So they're so different. And DeFi is a part of this. Bitcoin has been really slow in the DeFi evolution. But of course, if it's a base asset, it'll be built on in the way that we understand it to be. The easiest way to describe it in traditional terms is when you are in a credit bull market, i.e. the business cycle is expanding, everything's okay, you own as little US treasuries as possible, and you own as much junk bonds and all the stuff that gives you high yields and goes up in price. As the cycle ends, you tend to go back towards the asset that is less volatile, which will be US treasury. So where are we now? We're in the absolute guts of the bull market, as you keep pointing out, Will, right? So you can basically own anything, literally anything, Shiba, anything, and make money. Which one of these really have network effects? Which ones really have value? Well, that we're going to have to distinguish over time. Some of them, it's clear, right? Others less clear. So at this point, I'm at maximum risk taking. Now, I don't know enough to really want to go down the kind of really speculative end of the token market, because I just don't know enough about it. So I'm just picking blindly. So what I did is I took a basket of stuff to say, right, that whole bulk of alts is going to do well. Now, what's happened is it started with DeFi, then it's moved to these layer twos. And
layer twos, do you mean like scaling, interoperability?
Layer ones, and then the layer twos haven't done as well, I don't think. Might be from smaller ones, but I'm talking the kind of larger mid-cap stuff. The layer one Solana and stuff like that did astonishingly well. And I think the Binance chain was the one that started that whole thing off, and everybody started realizing it was going to move. And then I've got kind of macro strategic bets, because I think social tokens and the metaverse. So I'd been in those bets all year, and suddenly the metaverse bet pays off suddenly. But it's a random game to try and chase what's going to be the next coin that goes up. So I'm not trying to play that game. I just knew that the whole space was going to go up. I wanted broad exposure, and I had a couple of macro bets. And then I had the Ethereum and Bitcoin bet. And at this point in the cycle, if you're an investor and not approaching it from the philosophical point of view of Bitcoin, but from an investment point of view, you want to own less Bitcoin at this point in the cycle. It's always worked to own less Bitcoin, and that's fine. People seem to take that as like some huge judgment against Bitcoin, or no, I'm trying to make money. So because my background was finance, I knew that the securities lending industry, the derivative industry, everything was going to go on blockchain. That was absolutely clear the moment I saw it. The moment Emil explained blockchain to me, I knew where it was going. And that's not trying to brag. It's just that's finance, right? I kind of knew the plumbing, because we'd all had to become plumbing experts in 2008. So DeFi wasn't a surprise. It suddenly came out of nowhere. And what was interesting is how fast it grew. Now, DeFi is still pretty unapproachable, even to somebody like me. You just don't know what risk you're taking. You don't know, which one of the algorithms is going to succeed or fail. It's mass experimentation. It's really exciting. It's incredible. And it's really needed, because if you remember what I was talking about in March and April and May 2020 was we need a yield curve for crypto, right? We need to have a long-term interest rate to allow us to store our money and be able to price everything off it. And it didn't have one. Then DeFi comes and we get one. It's mainly still in the shorter term, but staking is actually done longer term for different chains. So it was a shock how fast it's come. It's still not fully developed. We're still developing only certain parts of it. We haven't even really got to the insurance industry, and that's coming onto this too. So how do I think about this and Bitcoin is, for me, Bitcoin has the highest probability of being the base layer of value. Value is probably the wrong word. Money. I think
monetary premium.
Word. Yeah. And I think that people get so confused over all of this. They think everything's in competition. They're not. Everything is accretive to a space that's going up 200x from here. And there's plenty of room for everybody. And all of these will go up in value. No, some won't, because some are not going to get traction. But generally speaking, people say, well, there's all these ETH competitors like Solana. Great. They're all going to go up in value. Will ETH be as dominant as it is today? No. Will Bitcoin be as dominant as it is today? No. Will Bitcoin be challenged in its role? Highly unlikely. Will ETH be fully challenged? Don't know. Possible, because it's a more open platform. So they're so different. And DeFi is a part of this. Bitcoin has been really slow in the DeFi evolution. But of course, if it's a base asset, it'll be built on in the way that we understand it to be. The Bitcoin blockchain is highly unlikely to be used for the settlement and custody of security. Just it's not an effective use of that blockchain. But to have it as the store of value, savings, whatever you think about, and then to build DeFi on top of that, if I want to have my Bitcoin that I'm going to hold for 10 years, I'd love to get a yield on that for 10 years in a way that is secure and understandable. We haven't got there yet with Bitcoin. We're kind of getting yield from getting it from BlockFi or somebody else, but that's involving us in another set of risks. So I don't think it's solved yet, but it'll come soon, and it'll only help the Bitcoin ecosystem when it does, because it's really important for these institutions to have yield, not just price. Gold has always been kind of pushed to the side by institutions because there's no yield. Yeah, we need to think of it differently. In the traditional securities world, it's really straightforward. There's US Treasury. Let's call Bitcoin that, the safest of all assets. Then what is the next safest? European government bonds, maybe? Okay, fine. Let's call that Ethereum. Well, then there's, okay, what are these other ones that kind of look like Ethereum, but are faster or better, i.e. may give you different features and benefits, but are riskier?
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Well, that could be Italian government bonds, or it could be something else. All you're doing is moving out of the risk curve, and you're having trade-offs. Bitcoin's trade-off is security, is paramount, and its trade-off is speed. Now, with others, Ethereum had the smart contract, which was its killer app, but it's now got it's a victim of its own success. So costs are rising, and it's not as fast as some of the applications need to be. So then Solana comes along, or Luna. And they're all trading off centralization, decentralization, speed, and cost. And that is very normal. Much like when we buy a car, we'll trade off those things. What do we want to pay for? What can we afford to pay for? What features and benefits do we want? So again, it's just not a zero-sum world. There is no, the whole pie is growing. So what you're doing is just wedging more parts of the pie in there as new high-quality protocols launch. And it's only attracting more people because right now the securities industry can't use the Bitcoin blockchain. And they can't really use Ethereum. Could they use a layer 2? Maybe. Not really suitable. So they're waiting for what is the blockchain that works for them. Will it be one of these? I don't know. But so as soon as you start solving different problems with different blockchains, you bring in more and more people into the space. I was just having a conversation with Coy Sheffield from Visa, how they're approaching the space, what blockchains work for them. It's different than what works for somebody who just wants to store an asset like Bitcoin. So they're just all really different things that solve uniquely different problems, and a bunch of them will never get network effect because they don't solve a problem. Same as any other startup. I just think of it as that. Yeah. So my background was I worked for a bunch of big investment banks, selling to hedge funds, equities and equity derivatives. I ended up at Goldman, where I started and ran that business in Europe. And I was speaking to the world's biggest hedge funds, and I was there over an incredible macro time, which was the Asian financial crisis. After that, Greenspan cut rates a couple of times, and we ignited the tech boom. And I started looking at what was going on, and we could see that there was a debt bubble blowing. And the Asian financial crisis was actually the start of it. It was the start of the same debt bubble because Asian rates had gone down. The debt bubble had exploded. It then shifts to the Western market. The dot-com boom was part of it. That blew up. The Fed cut rates more again. Rates keep going lower. Then what happens is the whole trend rate of growth of the United States and the rest of the world started falling. And so debt went up again because people didn't want to accept a lower rate of growth. So they just keep borrowing more money. The next one was the housing bubble. That almost takes out the entire banking system. The answer to that is cut rates to zero and then start printing money. Then we go into the European crisis, 2012. That's a sovereign debt crisis. They're all the same thing, right? They're all based on the same problem. And I think that whole problem actually is to do with demographics, but that's a topic for another day. So we end up with this gigantic debt bubble. Europe almost loses itself in this process. I'm in Spain buying tinned food and a generator because Cyprus had just taken all money out of bank accounts more than 100 grand.
Wow. Just during like the Greek austerity measures and stuff?
Yeah, it was the Greek austerity measures. That was all going on. People were rioting the streets in Spain, Greece, and everywhere. But Cyprus, they said, right, all the banks are guaranteed up to 100 grand. Anything after that, we're going to confiscate. It was the first bail-in. When I saw the bail-in, I'm like, oh, shit. So now you're going to socialize the losses amongst bank account holders, your savings. So I started thinking, okay, we need to do something about it. Because also the other thing I discovered in that process is if any one of these European sovereigns of any real size, i.e. Spain, France, well, Germany wasn't under stress, but really it was going to be Spain, France, or Italy. If one of those went, the whole system would have ended. That's why they didn't let it happen. That was Draghi's, whatever it takes moment. So I start looking around the world to build the world's safest bank. I think we need to do something where there's no leverage involved, where we can protect savings. That was more difficult than I thought. Trying to start a bank is not easy. And I did it with some pretty serious people, but we couldn't get there. And during that process, a friend of mine called Emil Woods, who ended up starting Luca, also Paxos and Liberty City Ventures, all of that, ex-Goldman guy, hedge fund guy, said, listen, have you looked at Bitcoin? So that was 2012. I started looking at Bitcoin. I wrote probably the first macro piece about Bitcoin back in 2013, early 2013. I said, I think this is the answer to the financial system. I think we can have recorded ownership of all assets, the whole tokenization thing. I was very quick to see where this could go. But I just thought that it looked a lot like gold. So I just did the back of the envelope maths, not as good as Plan B can do maths, but I just figured it out and said, well, with gold at $1,300, if we look at the same kind of stock to flow idea, Bitcoin's worth $1 million. And so I put it in a macro framework and realized what the opportunity was. So I was investing from 2013 onwards in the space. So that's kind of my whole Bitcoin story.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.